Alright, so what I'd like to talk about is exercise 13-8. And exercise 13-8 is a good problem because we're going to do it both in the original form as a trading security, and then I want to talk about it in the form of available for sale, and I want to add one additional issue is when we sell some of the stock after. So let's do it in the original format first, and this is where it's a trading security. And so Midwest Bank invests in trading securities. At the beginning of December 2013, the bank held no trading securities. During 2013, it entered into the following trading securities transactions. It purchased 500 shares of Carroll, and then on the 21st, it purchases 800 shares of Dynamo. And the company's fiscal year ends on December 31st. So let's just kind of figure out, if these are trading securities, how these transactions would look. So on 12/10, we'd have investment in trading securities, and I'll just abbreviate it as TS. And right, we have 500 times 76. That's going to give me $38,000. And we're going to credit cash, $38,000. And remember, we account for it as a portfolio, so we don't have a separate account for Carroll and Dynamo. Everything goes into the trading securities account. And then on 12/21, we purchase some more trading securities, investment in trading securities. And we're going to credit cash, and this is 800 shares of Dynamo at $34, so $27,200. All right, and so it's important to recognize, right, the price per share. I'm just going to put it up here, $76 a share, and then $34 a share for Dynamo. And right, for trading securities, right, we have a fair market valuation. So at the end of the period, what they tell us here is we have to make our adjusting entry at 12/31. And again, you want to figure out the unrealized holding gain or loss. An unrealized holding gain or loss is going to be equal to the fair market value of the portfolio minus the net carrying value. And for trading securities, right, when we think about the net carrying value, if I'm using my T accounts here, investment in trading securities, we don't normally use a valuation account. And so, right, we would just have these two amounts here, $38,000 and $27,200. And so the carrying value of the asset here is $65,200. And so we compare the fair market value. The fair market value of the portfolio is $65,900. Oops. $65,900 minus the carrying value of the portfolio is $65,200, and right, the unrealized holding gain loss would be $700. It's positive, so we know it's an unrealized holding gain. And ideally, right, you want to think about, right, for the two securities, right, if I was looking at Carroll and Dynamo, right, Carroll had a cost of $38,000. Dynamo has a cost of $27,200. The fair market value of each is $39,500, and for Dynamo it's $26,400. So basically, right, we have a $1,500 gain on Carroll, and we have an $800 loss on Dynamo. So we have a net gain of $700. And for trading securities, right, the journal entry that we need to make here, I'm going to go to the next slide now, is 12/31 investment in trading securities, right, because we don't usually set up a separate allowance account and we're going to just debit $700 and credit unrealized holding gain loss $700. All right, and that would be our adjusting entry at the end of the period. And remember, the big key here is this would go to the income statement, just as if it was a realized gain or loss. And I'm going to make this a big point because when we get into available for sale, we want to make sure that we're doing this correctly. All right. Now I want to add one additional aspect to this exercise. And I want to say on January 15th, on 1/15, on 1/15, we sell 500 shares of Carol at $81 a share. And let me just put up that T account again. Investment in trading securities. Remember, it was $38,000 and $27,200. That was my 65.2. And then, right, we had to adjust it for 700. And we always know whether we're doing this correctly by making certain that at the end of the period, the carrying value of the asset is the market value. So 65.9, 65.9. Now, when I sell these shares of Carol, right, when I do it for trading securities, I'm only going to look at the prior fair value of the asset from the end of last period. So if I sell these shares on 1/15, I debit cash for $40,500. Right, that's the 500 times $81. And what comes off the books is investment in trading securities, is the previous fair value. And remember, we had adjusted this asset from its purchase price of $38,000 to $39,500. Right. We recognize a $1,500 unrealized holding gain, $800 unrealized holding loss, and so that previous unrealized holding gain is in the income statement already. So now we end up with a realized gain of $1,000. And that would be our journal entry there, right? We would take the $39,500 off the books. And we do that, we end up with the $26,400, which is the fair value of the Dynamo asset that we still have. All right, so when I do trading securities, because realized gains and losses are no different than unrealized holding gains and losses, when we calculate those at the end of the period, the realized gain is simply the difference between the previous fair value or the previous amortized cost of the asset. All right. Now, I want to do this now also as if this was available for sale. So I'm going to go back here and adjust here. What if instead this had been available for sale securities? All right. And so, again, we would have made our two journal entries. Instead of debiting investment in trading securities and investment for trading securities $38,000, $27,200, I would have just debited investment in available for sale securities $38,000 and $27,200. So I'm not going to do those first two journal entries where we purchase the securities. I'll just make sure we know how to do that. All right. But now I want to do my 1231 journal entry, and this is for my adjustment to fair market value. And with available for sale securities, we start and we do this allowance for change in fair value of available for sale securities. I'll just call it allowance for change in fair value. And remember, we're going to calculate that unrealized holding gain and loss in the same way. Fair market value minus net carrying value. And so we have this, the fair market value, remember, which was the $65,900 minus the carrying value of $65,200, because the balance in that allowance for change in fair value is 0. And so we get a gain of $700. And right, with available for sale securities, what I'm going to do at 12/31 is I'm going to use this valuation account, allowance for change in fair value, 700, unrealized holding gain and loss, $700. And now remember, this goes to OCI. Big difference, right? It goes to OCI. It's going to show up in other comprehensive income. And so let me debit that to that account. My balance there is $700, and we know that I did it right because when I look at the net carrying value of the asset, the investment in available for sale securities plus the allowance for change in fair value, they add up to $65,900, which was the fair market value. But now, right, and this is the key part of this, I sell 500 shares of Carroll for $81 a share. And this is the part that is a little bit tricky for available for sale. So on 1/15, when I sell those securities, right, I get cash of $40,500. Remember, it was the $81 times the 500 shares, 500 shares of Carroll times $81. Now, in this case, right, when you're doing available for sale securities, you have to look at the original cost, or if they're debt securities, amortized cost, and, right, investment in available for sale securities, $38,000. And so in this case, we get a realized gain of $2,500. All right. Now, this is the part that's tough because remember, this $2,500 ends up in the income statement, and that's why we have to recognize the full amount of gain or loss, because with available for sale securities, those unrealized holding gains or losses went to OCI. And so when you finally sell a security, to get all the gain or loss in to the income statement, you have to look at the cash minus the cost of an equity security or the amortized cost of a debt security. Now, in addition to doing this entry, though, we also have to back out the previous unrealized holding gain or loss for that security. Because remember, when I recognize that $700, $1,500 of that related to Carroll, and an $800 loss related to Dynamo. And so when I kind of back out this $38,000, I end up with $27,200 in my investment for available for sale. And if I kind of looked at that, right, I'd have $27,200 plus $700. That would overstate the value of the asset. So I have to recognize and take out the unrealized holding gain loss. So remember, basically what I have to get to is a balance here of $800 credit, which recognizes that loss on Dynamo. And so I need to credit the allowance for change in fair value, of available for sale securities. I'm going to debit that for $800 and recognize an unrealized holding, I'm sorry, for $1,500. Oops, sorry about that. $1,500 and unrealized holding gain and loss, $1,500. And right, what that does is it negates the $1,500 of unrealized holding gain that we had previously recognized on the Carroll shares. Now, the key to remember here is for available for sale securities, over the lifetime of security, from the time you buy it to the time you sell it, unrealized holding gains and losses must net to zero, because only realized gains and losses matter. That's what ends up in the income statement. For trading securities, because unrealized holding gains and losses are really no different than realized gains and losses, we don't need the second part of the journal entry. In addition, when we calculate the realized gain and loss, it's the difference between the selling price and the previous fair market value. Or if they're debt securities and we've amortized some costs, the fair market value plus the change in amortized cost. All right? So this is an excellent exercise. We go to that next step, thinking about what's happened to the securities, and we really have to understand, right, how do we make that adjustment when we finally sell the securities? How does that affect versus trading versus available for sale?